So here we are on part 2 of what to do when you find transactions in your client's file that you're concerned they may not be legitimate expenses for the business or IRS approved businesses. So one of the examples I'll give you, and this is really common with contractors, people who travel a lot, is that you will see a lot of meals. And sometimes you'll see 3 in a day: breakfast, lunch, and supper. Breakfast, lunch, and supper. And so it's hard sometimes to determine, well, are they traveling? Is this a travel meal, or is this a meal that is just in the area? So luckily, for when they use their credit card or their debit card, you'll often be able to see, it'll say McDonald's, Atlanta, or, Wendy's, and it'll have a name of the city. And almost always it'll have the name of the city and the state. And that should clue you in. Hey, does your client live there? And if it's where they live, it's a local meal. And unless they're meeting with a client or with a vendor, some type of legitimate business expense, it is not deductible. So a lot of my contractors will just go through the drive-through, or they'll, pick up their breakfast, or they might even pick up their breakfast for them and maybe a colleague, or if they're a contractor, maybe for a couple of other employees or contractors that work with them. And they'll say, oh, I bought, lunch for all my guys on the work site so they could keep working. So there's a lot of issues with that. There's a lot of exceptions to the rule. And meals and travel meals, they're changing a lot. And so you really do have to get to the core of what to do with those transactions. So one of the things I ask my clients to do is I always want a receipt. If you're ever audited by the IRS, the first thing they're going to ask you for is all of your receipts. And the number one receipt they want is meals. Often, and I've gone through several audits, often they will just say, we want meals and we want your supplies. They'll look at your chart, they'll look at your chart of accounts and look at your tax return, and they're like, yeah, your phones look good, utilities look good, contractor pay looks good, but these meals look really high for the percentage of your income. So there are some times when someone has a lot of meals or a lot of travel meals, it will kind of red flag that in the IRS to say this is a little bit higher than normal for people who, let's say it's a $100,000 company, they bill $100,000 and they spent $30,000 in food. That's going to get you a pretty quick red flag, right? So there are some things that can get the client, in trouble. But I ask them, I need a receipt for every one of those, and I ask them, they have to write on the receipt the business purpose and who they had lunch with or dinner with or whatever. So if they don't write those two things on the receipt, the IRS will reject those. It depends on the IRS agent that you get, the auditor that you get, but the tough auditors, which sometimes are really tough, especially if they've had a bad day, they will reject all of the receipts or anything that doesn't have a receipt, or all the receipts that don't have who you ate with and what the business purpose was. So sometimes you have to go back and recreate those receipts, or I have to get the paper receipts and have him write on there what they are, or tell me what they are and I'll write them on there. Sometimes I will write them in QuickBooks. I'll upload the receipt and then I'll write what the business purpose was if they've let me know in an email. But that's another reason for keeping really good records and attaching receipts when you can, because if the client is audited, everything's electronic, it's all in there, and you can go back and look and find your record there. So what to do when a client has maybe what you consider, this is a lot of meals, breakfast, lunch, and supper every day for a week, and it's all in town, you're probably not gonna fly. So you just ask them some more questions, get it in an email, and have them put it in an email. And what I do is I ask the CPA, look, this client has a lot of meals and they're kind of all over the place. Some of them he goes to, marketing, ventures out in Las Vegas. I get that. Those are probably going to be paid for. He does a lot of traveling locally, but he also just buys food for his staff sometimes, or contractors, and I'm having a hard time keeping up with it. I will often do 3 meals. I know it sounds crazy, but for a client like that you have a lot of stuff and you're trying to, figure it out, the tax laws do change on meals quite often. And so to have these 3 set up will help you if the tax laws begin to change, or the CPA needs to do a little deep dive on it, they can do that. I'll do travel meals, I'll do local meals, and then meals where they are meals for staff or meals for, and it's not always staff, but it could be contractors, you know, if they're a contractor. So those are the three that I do, and it allows me to kind of categorize them, and then the CPA can come in and say, okay, these local meals really aren't legitimate, and they can pull them out to owner draw. They can make that choice when they look at the list and they see what I've written. Now you're going to have some details, so I encourage you on the notes section, so when the CPA pulls that QBO report that says meals and he clicks on it, you want in that memo field what that is, so they can quickly look and say, you know, I took my wife to lunch, or I went to lunch by myself, or whatever, and he can read it and say real quickly, these are not, you know, deductible expenses, and be able to move those. So travel meals are a little bit tricky too. You know, they're saying now that when you travel, if you're the owner of the business, you need to have lunch or dinner with someone else in order to have that meal deducted at 50%. And for your staff, of course, it will be paid at 100%. But there are lots of little nuances like that in the meals. So having them separated out like that will really help you. Don't just lump everything into meals. And also, I'll have clients sometimes that they'll have like no meals, or they'll have like $50. I'm like, dude, you can go eat. Like the IRS is okay with you taking people to lunch, or, you know, taking vendors out to lunch, or meeting with your bookkeeper, you know, whatever it is, and writing some of that off. So sometimes it's the other way. I will go and look at a client and say, hey, you know, if you're looking for more expenses and you've had some meals with clients, or, you know, your banker, whatever it is, you know, go back and look at those and try to find those and put those in QuickBooks. But it's always good to create those different categories for people who are trying to just write off a lot of meals, and you're feeling a little uncomfortable about where to put them all, or it's just not clear. The client's like saying stuff and you're like, that's not really, sounds legitimate, but I don't know what to do with it. You can also look at the past. If it's a new client, what did we do in the past? What did the CPA do in the past? And I will tell you, the CPA will sometimes say, look, we're going to give them 50% of these meals because I don't know what to do with them either. They're wishy-washy. So if we're ever audited, that will put us in maybe a more favorable position. It will put us so we're not in a huge, you know, penalty position, something like that. So do those three categories, ask a CPA or tell the CPA this is what you're doing, and let them know, and let them be the judge at the final end. Let me know your craziest meal stories or meal and travel stories, and I'd love to help you out if you ever have a situation like that. I'm Lynn Talbott, the Bookkeeper's Coach.